Now, a lot of you have probably heard the term creative financing. Creative, what does that even mean? Well, the definition is simply buying real estate using non-traditional financing methods. Now, if you were to go up to any random stranger on the street and ask them, hey, how do I buy real estate using creative financing? 99% of the population is not going to be able to tell you how to do that. Now, if you were to contact your local bank and say, hey, I'm interested in buying real estate, how do I go about doing that? They're going to have you fill out a loan application. They're going to run your credit. They're going to see what your credit score looks like. They're going to ask you how much money you make, how long you've been working there, what is your average monthly and annual income? Have you been working at your job for 2 years? And it's really unfortunate because a lot of people who could be buying real estate right now, either to live in, buying rental properties, building your portfolio, a lot more people could be buying real estate regardless of rates, okay? What I'm talking about today is rate agnostic, which means I don't care if interest rates are 2% or if they're 20%, doesn't matter, because we don't buy for rates. We buy because it's a good deal. It makes financial sense. You should be buying because this is going to allow you to acquire a lot more properties using a lot less capital. Now, for a lot of people, traditional financing, and when I say traditional financing, I'm referring to banks, credit unions, financial institutions, and this is where you go and say, I want to buy a house, and they're going to check your credit, and what's your score, and how much income do you make. That's traditional financing, okay? I'm not talking about that. Now, I will say this just as a quick caveat. If you can qualify for traditional financing, if you have a great credit score, if you have a good job and you make good income, then traditional financing is absolutely a strategy that you should pursue. If you need to buy your own home, if you're looking to get the best rate, if you're looking to get the lowest monthly payment, traditional financing is going to provide that for you in 90% of those cases. But there's a lot of people who do not qualify for traditional financing. And it's unfortunate because they will relegate themselves to renting and paying $2,500 a month, which they get nothing out of other than the right to stay there another 30 days, but they're not building equity. Now, you guys know the statistics. The highest percentage of millionaires made their first $1 million in real estate by using these traditional methods to buy, fix, and sell property to obtain wealth. And then they started building a rental portfolio, and they started getting a lot more upside equity because of these strategies.